All right, everyone, welcome back to the channel and thank you for tuning in to another video today. We're looking here at the chart of the NASDAQ 100. I'm not going to talk really too much about the ES because there hasn't been a lot of good activity going on that particular market. So if we trade the ES futures, I'm kind of just waiting for the beginning of the year for things to kind of start volume to pick back up, the pace of the market, things to get a little bit more volatile than they have been. But the NASDAQ's where it's been at for the last several weeks. That's why I have not traded the mini S&P 500 recently over the last few weeks. But been trading the NASDAQ. Today was a one and done type deal. I was waiting for a good setup, and I noticed it today when we tapped into a key area of demand. Now, this video is also I'm going to do two things in this video. I'm going to do one, I'm going to discuss the trade that I took, which I've seen quite a few individuals over on the Discord community take as well. All right, same entry or same similar location. I got into the trade a little bit late today because I was doing things and just getting in front of my charts, and I had to find an entry point. I knew what the market was trying to accomplish and possibly where it was going to go up to, which is probably going to be somewhere in this zone up here, okay? Around 109, 110, maybe a little higher, okay? And reason being, this is a supply area now. It's untested. There's a small gap of void there back to the supply zone in which it can react at or reject once it gets there. Now, this was a key area of demand right here from yesterday's trading session. Now, one thing we have to keep in mind is the structure of the market at all times, like I talk about. And what we see here is that the market is doing what from the last several sessions, okay? It pushed up, broke structure here to the upside, pull back, broke structure again, back to the upside here into yesterday's trading session, which was the 26th. Broke this area here, all right? Started making higher highs and higher lows, pushed up. Into the overnight session, we broke yesterday's high, so we broke structure again. Now, there was a pullback that could have been taken shortly after the market opened, about 9:35, somewhere around there. All right, and I'm talking about this area right here. Shortly after the market broke structure back to the broke structure. It broke yesterday's high, broke higher here, pull back. This was, if we look at the lower time frame chart, I'll show you right here. I'm going to draw you, but it's not a. There's a gap. No, I'm sorry, not a gap, but an imbalance resting back at the area where there was demand at, okay, on the lower time frame. 12 range chart for me. I trade range based charts, guys. I don't trade time or volume or tick. If this is your first time watching one of the videos. Now, I just want to show this right quick, but this right here says there's an imbalance resting right here within the zone, okay? So what happened is we got the break of structure above yesterday's high, right? Above 17,011. Breaks higher. This is a tested area of demand resting right here, okay? You saw the candle broke higher, and this candle here came back, and it filled the gap of void that would have been if the market is just kept blasting to the upside right here, like right here. All right, broke above right here. This green candle broke above this last down red candle. Next candle that closed, the wick of it came back and filled any area of gap back to the void back to the demand zone, okay? So, but there was an imbalance resting inside the zone there. So when the market came back there, it did what? It reacted, rejected. We look for the closing break of the candle above, and you can go long back up to this upside right here, okay? So I would have gotten out somewhere between 17 and a half and back up here to around 18 and a half, okay? All right, so you could have taken that trade there if you knew it were able to look at that trade or that setup and take it, okay? But the actual trade to take today, let me show you. Then what I want to talk about too as well, just kind of in summary, I've talked about this in several videos, because people always ask the question, especially newcomers, and it's fine, what's the appropriate or the correct way to draw, supply and demand zones? I'm going to show you how I do it, okay? So that was an example of how to draw a zone just quickly, but I'm going to go over after I break down or talk about the trade that most traders that I found on the Discord community. Again, I'm gonna say this right now. If you're not a Discord community member and you want to join the community, it's free of charge. Find the link down in the description portion of the video and invite yourself in, okay? It's free, all right? Find the link, scroll down. You'll see down below in the description portion of the video a link to join the Discord for free. And you can come over, you can ask questions on the general chat channel if you have questions about the future markets and you're new to the futures. Primarily, most of us trade the index or indice futures, so come over and join us. Or you could engage on the trading floor, and that's where we as traders share images and post our trades, okay? So moving on now. Now, most everyone had their eye on this demand zone right here. I'm going to go ahead and show you how I draw it, okay, for those that are interested. All right, so what took place here was the market was making higher highs and higher lows, okay? It broke yesterday's, broke structure, taking out yesterday's highs, but it broke structure to the upside. And the market pulls back. But you have to be mindful here because as we started to retrace back, what did we do? We started taking out areas of structure into yesterday's trading session right here below 17,071, okay? Around that area there, 17,070, 71 area, okay? But there is an area of demand from yesterday's trading session, which is right here. We see the aggressive buying. If you don't know much about supply and demand, again, there's multiple videos on the channel where I go into detail about supply and demand and how I trade it. But supply is aggressive selling, demand is aggressive buying, and we're trading and we're looking for the market to retrace and tap into one of those areas and trade it on the rejection. The market pulls back here. Now, I'm going to show you, for anyone who's interested, about how I draw supply and demand zones, okay? So I'm going to give me a little rectangle, okay? Aggressive buying here, okay? We got continuation of breaks to the upside. High, higher, low, break. High, right here, higher, low, break. Taking out, structure from the prior day. So as we were moving higher, we were breaking through areas of structure from the prior day, and we continue breaking structure to the upside. So we're bullish, right? And when we're bullish, what are we doing? We're looking for demand setups. So this was a demand setup from yesterday's session, right? So the way I draw it is, since we have this swing right here with the high, higher, low, and then the break above, we're breaking structure to the upside, okay, after taking out the high here at 61, all right, as we broke right here. So the top end right here of this candle, or the wick of it, right, because this was the last little bearish candle on the pullback, this little swing right here, when the market pulled back right here, this bearish candle, so the top end of that wick to the bottom end. You have to include the green candle here, because that green candle there, the wick of it dropped below the body of the red candle there. So I draw from the top end of the wick of the red candle to the bottom end of the wick of that green candle, okay? And then I drag it out. That's all I'll do. Simple as that, okay? I'm looking for the last bearish candle, okay, that came out of the swing that aided in the aggressive buying to the upside. Right here, aggressive buying, all these green candles. The market comes back to it. This is my demand zone now. That's how you draw it, okay? Again, top end of the wick of the last bearish candle to the downside out of a swing, which will be the top end of the wick of that red candle to the bottom end of the wick of this green candle, because, again, that green candle did break slightly below the bottom end of the body of that red candle, all right? Now, those that know about the strategy and how I actually trade it know that what? We wait. When we're looking at our higher time frame and we get our zone mark, we wait for the markets to do what? We trace back to the zone. Then we move down or scale down to our lower time frame chart to look for an entry. So because we're trading a demand setup here off the higher time frame, we're just looking for a demand setup or an area of demand to be created on the lower time frame. And then we look for the rejection on the lower time frame, okay? And to take the trade going back up, okay? So let me show you. Move down to my 12 range chart. This is my lower time frame. So we're talking about this general area right here where this, let's go ahead and just do this. I'm going to place this zone on all charts. That way we can see it on the 12 range. So here it is right here. Now I'm looking for a demand, an area of demand to be created. You can wait for a break of structure if you're looking for it to the upside, because we're already pulling back and tapping into a demand area, right? Okay, on the higher time frame. So we get a push up, pull back, boom, break higher, we broke area here, and creating an area of demand right here as we get this swing to the upside here. This is a aggressive area of buying on the lower time frame. Break structure, we get the pullback, and we're looking for it to tap into right here at 17,063. Now, let's go ahead and draw our demand area on the lower time frame. Let me blow this up a little bit too so you can see it, okay? Again, I got into my trade late because the opportunity in which I'm going to show you should have been here, and you should have held the trade if you could have, okay? Now, again, push up, high, higher low, aggressive buying, new high, break a structure as we're moving higher, okay? Break a structure to the upside. We pull back, okay? All right, break a structure on the lower time frame. We're looking for a demand setup. We're looking for an area of demand being created so we can take the trade with or in accordance with the demand setup off the higher time frame, okay? Because this is the higher time frame demand. Area demand created. Pulls back. We're going to draw. See the swing here? The high, the higher low, the break to the upside here, aggressive buying. There's also a little swing within this swing right here. High, higher low, pushes up, high, pull back, boom, break. So we're looking for the last, even within a swing, a small little swing like this, the last bearish candle to the downside, which is this one right here, okay? And I want to mark the top end of that from the wick of it down to the bottom end, okay? And because we have, let's blow this up even more so you can see it, this green candle right here that slightly broke below the wick of it, breaks below the body of that red candle, we need to include the bottom end of that green candle as well. So we're going to do that and just draw it out. Bring it out, okay? Now, when the market came back right here, we were primarily within, what was that, 63.5. It came back 2 ticks, okay? Now, you could have taken that trade. I talk about, 2, 3 ticks, possible 4 at the most, getting the rejection and going long, right? At least I will because I'm aggressive, all right? Now, you could stay out of the trade and just wait for it to pull back and tap 100% into the zone, which it did. Not right here. It took place about 20 minutes later when it tapped into it. So once it taps into the zone, okay, once it taps into the zone, 100%, if you want to wait for it to do that 100%, and you're not aggressive like I would have been and taking that trade when it pulled back 2 or 3 ticks from that area there, from that zone, then you could have waited. Once it taps into it, what do we do then? We look for rejection. What is the rejection? The break and the close of a candle in the opposite direction. So, taps in here, comes down. Now, typically speaking, if I would have waited for it to come back and finally tap into that zone, okay, we got demand zone within a demand zone. Demand off the higher time frame came back and tapped into the higher time frame demand and the lower time frame demand, okay? So once the market comes back to that area, we got this aggressive hammer candle to the upside. It comes there, and I talk about when the market comes to a zone and it wicks and pulls away from it real quick, like as you see right here, that candle there, that bullish candle right there, most of that candle was all wick, right? Meaning that's a sign of clear rejection when the market does not want to close into the zone, but it wants to move away from it, okay? It wants to go back up. And then the hammer end of it, that's a bullish signal, okay? So you could have got in there at 65.5, or maybe waited for the break and got in around about 68, right? So if you got in at 68 and then you took the trade up, okay, let's see, you got in and it went up to say 74. Maybe you took profit there, okay? Maybe you got scared and got the trade, picked up your 5 or 6 points and got out. It comes back and you're saying, wow, I'm glad I got the trade because now it's coming back. You have to also understand, look at the higher time frame and what it's possibly trying to accomplish too. Because the market likes to mirror itself. It likes to fill in those imbalances. Like, look, there's imbalances resting here, okay? All right, you got imbalance right. I'm just going to show you right quick. There's an imbalance from here. From here to here. There's an imbalance from here, from the bottom of this candle here to here. So there's imbalances in areas. I know it looks messy, guys, but I'm just trying to tell you. There's imbalances, and basically those imbalances, you can see the spaces in between these candles that need to be filled in, okay? So it's probably going to want to aim more likely and fill those imbalances and test this area of supply at the top, all right? So my thing is that I would have probably either taken profit, maybe, but in looking at it and trading this and knowing what it's trying to accomplish, I probably would have held that trade out. Now, if you got into the trade around this area right here, right? What do you put your stop at? Well, I talk about places stops at, in multiple videos. Primarily the back end of this candle right here. Not tick to tick, give yourself some room, because what they do is, look what happened. It went in your favor, okay? You didn't get out. It comes back and they come below this area right here at 62.5. What? About a point. Let's see here. No, I'll take that back. About 2.5 points, okay? 8 ticks. or 10 ticks or whatever. And then they move the market back, and the market goes back in the same direction again. So you have to give yourself some breathing room, whether it's several points, if you even a few ticks, and you're very conservative style trader, you would have got stopped out right there. Or you can place it at the back end of the area of supply off the lower demand off the lower time frame, which would have been below here at 59. But you have to understand what they're going to actually try to do. Okay, what is their goal? What are they aiming for? And that's the part about trading that you have to weather the storm. All right. Either trade it or not trade it at all. You have to. Trading is risky as it is, so you have to understand your limitations of risk. That's practicing proper risk management. Where to place your stop at? Do I want to put it at the back end from where the market started rejecting? Okay, all right, where it initially started rejecting. Once it tapped into the zone, give it a few points there. Just a few ticks is not going to be enough. You have to give it maybe a couple points sometimes. A few ticks. I mean, you could do that if you're very conservative, but you got to understand that they may want to test certain areas, and because they know people are probably putting in stops right here, and sometimes they'll come down here and even want to test below this area of demand right here, okay? And which they did when they came below this area of demand right here at 59.25. How much did they come below it? What, 4 ticks right there before they started doing what? Blasting back off to the upside and didn't come back to that area. So you have to understand those key areas of where they're going to test at, all right? Again, if you got in right here and you put your stop right here, you got stop, okay? And you got stop maybe a couple ticks, 2 points, 2.5 points, whatever it is, and you're saying, man, now it's going in my direction. So you have to understand that when trading, the practice proper risk management and have an understanding that that's just how the market moves. Maybe you could have possibly just, if you got stopped out here, look for the next setup to get into a trade again, okay? So I was looking for opportunity and where I could possibly get into a trade because I missed all of this over here. So what I did was, once I saw the market come back to this, this area of demand right here, okay? All right, after it rejected here, pushed up and came back to this area here again, and when it came back down, it rejected the demand area again and did not want to break through it. That's a clear sign of rejection. So what I did was I waited for the market to start making higher highs and higher lows and look for an area of a demand to pretty much take the trade going back up. Because and look at my higher time frame, I said it looks like they're going to be trying to aim for this area up here. All right. So could have got in like right here. It pushed up, started making higher highs and higher lows. After coming down and rejecting this area of demand again, pulls back. There is what? A supply area, small area, demand, small area of demand. I'm sorry, guys, I'm getting it backwards. I know what I want to say, and what I'm trying to say is just that sometimes the words come out not correctly. But this is demand, okay? Pulls back, rejects it, pushes up, comes back to the small area of demand on the 12 range chart again, and then that's where I got in because I was super late today in trading, but I saw it rejecting right here. I waited for this candle to close, and then the next candle right here to close around. I think it was 70.5 right here, and I got into the trade, okay? And I took it back up to, I was looking at price action, okay? And I noticed that they're probably going to aim for this area here now to fill these imbalances resting right here, okay? Back up in this area here around 1790. Yeah, I think I got it out right here around 1790. 17,090. I'm sorry, guys, not 1790. 17,090. Okay, so that's what I was aiming for right there. Again, showing you the trade that I took. All right, I was late on the entry here. The entry point you could have got in here. Look where I got in at 1770 and a half, or 17,070 and a half, or 17,071 and a half. Somewhere in there I got in. But anyways, what I'm trying to tell you here is that if I would have got in here, then, I'd have been, well, I guess in looking at it, it's really not much difference when it comes to the entry, okay? Because technically I would have got in right here at 65 and a half. Yeah, so I would probably picked up another 5 points right there. And that's fine because I would have held it. Because I would have known and looking at the higher time frame where they're trying to go to at least, all right? So anyways, that's how I traded that trade. I know some of you guys took a trade way earlier, and that was a good opportunity around 10, 35, 1040, somewhere in that area there. If you got into that trade, congrats to you. You have a solid trade entry. You just have to know how far to take the trade to, how to weather it. And that's what we all try to do as traders. When we try to perfect a strategy, is stay into our trades longer, right? We want to kind of allow ourselves to trail with them and ride them out, okay? I know it's tough. It's a struggle because everybody wants to try to, it's easy to pick up a few points, right? But trying to pick up those 10 and 15 points or even 20-point runs, that's tough stuff because you don't know where the market can reject that, because it can turn around at any given point and start moving in the opposite direction, okay? So anyways, but that's how you trade. That's how you draw the zones correctly, okay? Again, I show it to you on the higher time frame. You draw that's an area of demand right here, right? So the last bearish candle to the downside on this pullback, a little swing right here, top end of the red candle, okay? Last bearish candle, the wick of it. Now, if this green candle did not slightly close below the body of that last bearish candle, then it would have been just like this right here. Top end of the red candle, bottom end, which is top end of the wick of the red candle, down to the bottom end of the body of the red candle. But because this green candle closed slightly below it, you also have to include the wick of that green candle. All right, that's how I do it. Okay, same thing here. You can see it here on the 12 range chart. The top end of the red candle there. So the market pushed up, pulled back, pushed up. Last bearish candle, top end of the wick of the red candle, including the bottom end of the wick of the green candle, because that green candle came slightly below the body of that red candle. Okay, so that's how I do it, guys. I just want to kind of show you the trade that I took. I stayed into it. It was about a 20-point pickup for me on that one trade, and that was done. And that's how you correctly draw your supply and demand zones as well. Or at least that's how I do it, okay? Now, if we're looking to, just say for example, I'm going to give you, draw out a supply zone, okay? This was aggressive selling right here at the top, correct? So the way we would draw the supply would be like this right here. I'm just going to show you a quick example. The same way, where just in opposite of or reverse of how we did the demand zone. So that last bullish candle to the upside, all right, we want to draw it from the top of the candle, all right, which would be the body portion of this candle here. But because we also have this red bearish candle that kind of slightly broke above that bullish candle, we want to include the top end or the wick end of that candle, all right? Okay, let's kind of correct this a little bit. Down to the lower portion or the bottom end of the wick of that candle to include the wick, okay? All right, so last bullish candle to the upside, all right, we want to draw it from the top end of this bearish candle, the wick of it right there, because it slightly pushed above that bullish candle right there. So we got to include the wick of that bearish candle down to the wick end of the bullish candle, and we draw it out. That's how we draw our supply zone, okay? All right, just like right here I showed you. Last bearish down candle, top of the bearish candle there, including the wick, down to the wick end of the bullish candle here, because it slightly broke below the last bearish down candle, okay? As we had a pullback here and a push higher, that it created this aggressive buying. Same thing here, aggressive selling, okay? Last bullish candle to the upside, that bearish candle slightly broke above it, so we have to include the wick end of that bearish candle down to the bottom end of the bullish candle here to include that wick right there. And that's how we draw the supply in opposite of or inverse of. Demand right here, supply right there within the community. But I appreciate everyone tuning in. I hope everyone had a wonderful, wonderful and joyous holiday for all those that celebrated. And now we're getting ready to move into the new year. Yes, things have kind of been stagnant, not really, kind of not moving enough. But it will pick back up as we get into and move into the new year. We'll start to see better swings. But also, I've been getting comments, people asking how can they join or become what we call an elite channel supporter or member. Guys, all you have to do is just click on, you see that little join button right here. Look on the page right here. You're seeing here when you're watching the video, somewhere near the share or the subscribe button. It's JOIN, join. Click on that. You'll see two tiers pop up. Loyal channel supporter and the elite channel supporter for $6.99. There probably been members that have probably told you about it or other individuals. Basically, all it is is I provide additional content, okay, within a private community over on the YouTube channel. So basically, once you've joined, you can click on the membership tab. Once you've joined and enroll, click on the membership tab, and you'll have access to all the video, additional video content, like the trade breakdowns. That's where I go into detail about the trades, okay, that I take in multiple sessions or multiple videos, okay. So you get this additional information, additional videos that cover to where I go in great depth about how I trade, about the trades I take, why I take them, where I'm looking to take profit to, you know, things of that nature. So it's as if you're kind of sitting next to me and I'm, you know, kind of showing you on my own charts. You can have access to that because I'm talking specifically to those people, those core individuals, or those group of individuals that have joined that community. It's $6.99 a month, not a day, not a week. So you're getting all that, plus you get the hand-selected video playlist of videos that I've actually myself went and watched, you know, or pulled out from over 600 videos. So you don't have to watch all 600 videos on the channel. I hand-selected a link by link, a list of videos that I put together that cover the most pertinent and core content of information, okay, valuable information surrounding how I trade. So maybe you want to sign up for that or join that. $6.99 a month. I mean, all you got to do. Most of you probably spend more than that on price a cup of coffee a day, a lunch, breakfast, whatever it is. We're talking about on a monthly basis, $7 a month is all it is. And you get access to all that other information that is for that private community of members, okay? And I appreciate each and every one of you that have supporting my efforts here in the community by doing so, because that's what you're doing. I'm providing you additional information. I'm providing you something in means of your supporting my efforts and create this valuable content for you. All right. So thank you for supporting me as a content creator. For all those tons of you guys that have enrolled in that program. Okay. Again, if you're interested in joining, just click on that join button. It will give you 2 tiers. You know, make sure if you're interested in joining and getting receiving all the perks for $6.99 that you scroll down and you sign up for the elite channel supporter tier. All right, that way you get everything. Okay, the trade breakdowns, the video playlist, you know, things of that nature. Okay. All right, so that's all I have for you guys. Please take the time to sub and subscribe if you haven't done so by clicking on that sub button. Make sure to turn on all your post notifications. Click on the bell. Turn them all on so you never miss one of the uploads here on the channel. Also, if you're interested in joining the Discord, again, please find that link down in the description portion of the video. Last but not least, hit a little thumbs up button, smack that like button for me. I appreciate it, guys, if you found value in the content. Loads and loads and loads of information here on this channel that you can sit back, watch, and educate yourself on, and basically learn how to trade yourself. You know, I'm not a teacher, I'm not an educator. I say this from time to time in videos. I'm just here to share my experience and the valuable information surrounding how I trade, okay? Just passing it forward so that other people can become inspired as well for all those that are looking to trade the future markets. Take care. I'll see you in the next one.